Can anyone hear me? There we go. Win. Okay, so obviously this is a good topic now. For the alternative investment area, really Wholesale Investor is built around the alternative investment space. And this topic for us is always sort of interest. And I suppose the perspective I want to get from the panelists is both from their own professional perspective and also their own personal perspectives as well. So as a starting point, it'd be great to have the panelists give a quick introduction to themselves. I'll wait for you last, Rohan, because you literally just spoke. Kishore, kick off with you.
Hello. Hi, my name is Kishore. So I'm working with Plug and Play Ventures. So we are a global innovation and corporate innovation and venture capital platform. Particularly, I'm looking after investments in the sustainable city space. So I'm looking after investments within the APAC market.
Yep. Cam? I find if you just stare.
Yeah, Campbell Newman with Arcana Capital. It's a commercial property fund, unlisted. We have about $230 million worth of commercial property around Australia, from North Queensland down to Tasmania and west to Perth and Kalgoorlie. We provide opportunities for wholesale investors to take a slice of the action. It's a unique sort of offering in that it's a single asset, single trust. So everything is a SPV, which provides great clarity, transparency about how the investment is being put forward.
Leslie?
Hi, my name is Leslie Chong, and I'm the CEO and MD of Immugene. We are trying to look at a space of great unmet need and trying to rid this world of some of the scourges that cancer has caused. We go after validated targets because we know that it works and there's a proof of pudding there, right? And so we've got a myriad of potential assets, and we've got a very near-term to market product that we just acquired. So excited to be with you guys today.
Rohan?
And my name is Rohan Hockings. I'm the MD and CEO of PYC Therapeutics. Just gave the introduction there. Very, very similar company in many respects to Leslie, although instead of focusing on the oncology space, we're very much focused in the rare disease domain.
So Rohan, I'm going to kick off with you, because I obviously know your background before sort of PwC and, for PYC Therapeutics, and you initially came into the company as an investor. So going from the alternative side, what attracted to you, firstly, about the investment into life science as an area, knowing that it's sort of a long gestational time to build value, to grow wealth and so forth? With your personal or family investor hat on, what sort of got you into the area? And I suppose, what would you like to articulate to other investors about investing into life science as an area?
The second part's probably easiest. That bit is it's really hard, and be careful. In terms of my journey into PYC, and I think you know, Steve, my background originally was in medicine. And so I felt like we had some enhanced understanding of the industry. I think I was probably wrong in hindsight. I think the very early stage nature of what gets done in life sciences companies was not as I had envisaged it, so it wasn't right in that sense, although the underlying asset in the company at that time was very attractive, and it didn't have a very clear commercial focus and path to it. So I was drawn to the attraction of the intellectual property and the idea that we could transform what was effectively a failed company into one that was moving assets productively into the clinic and seeing whether or not we could make a difference in people's lives.
And Leslie, I'll ask you a slightly different perspective. As a business builder in the life science space, you know, I said we talked before, we initially worked together. I made a mistake earlier. I thought we were working together when Immugene was at 20 to 30 million market cap. It turns out it was 5 million market cap, and they went as high as 3.5 billion. In fact, to give you a stamp, I remember the first investor evening Leslie spoke at one of our events. I had one of the investors beside me going, "That share price can't go lower. I'm buying some." Like it was like 0.001 cents, something funny like that. So what perspective would you provide for investors looking to invest into, you know, life science companies early, which is where you joined the Immugene journey, and what it looks like getting traction, hitting milestones, etc.?
I think you need to be very focused on the work, have experienced people to work with you and for you, because that's critical. especially in building a drug, you need people that actually know how to do drug development. I myself have 4 drugs that I've helped market all the way from bench to bedside. Everyone that's joined our company thus far has had a life science experience and drug development. So I think that's critical, that experience. And you want to put together a team that actually believes in the cause of curing cancer or an unmet need, because truly, if you don't believe in what you're doing, you're going to do a mediocre job, and that's not what we're here for.
Campbell, I'm going to go you on the personal side, right? So you were formerly the Mayor of Brisbane, the Premier of Queensland. I'm sure when you finished your role as the Premier, you had all sorts of high-profile consulting gigs and all sorts coming your way. Why did you decide to move into commercial property as an area? And also, I suppose, give some, because I know you're an angel investor as well, so give some context to your own investment thesis for yourself.
Well, you're being very kind and polite. Actually, ladies and gentlemen, I was hosed out of office quite dramatically.
You're hosed in and then out.
I was hosed in and hosed out. But I suppose literally 8.5 years ago, I finished my political career, which I'd been in for 13 years, and I was sort of like standing there figuratively on the street corner with my little cardboard box with my office, cleaned out my desk. I think, what am I going to do for the next 10, 20 years of my life? And I've had a range of careers. And I wanted to do a range of things. So I actually wanted to get involved in tech. So I was involved in a very successful Australian agricultural robotics company based in rural Queensland. So I was with them for a few years as their chair and helped them raise capital. I was involved in an AI company in the voice recognition space, which it's still there. I don't know how it's going to go. But then I've been an angel investor with my wife in a whole range of startups. So it was just, I wanted to get involved in technology. I wanted to get involved in the space and help people raise money and also participate in their boards. But you also need to pay the bills initially. So, you know, I love property, passionate about property. I got started in this commercial property space, and we just love the thrill of the chase, basically. We love finding value where others don't see it. We're contrarians as well. We invested in heavy engineering, industrial assets in the coalfields of Queensland at a time where people had mistakenly said, well, there's going to be no more coal mines. Well, that's not true. There will be coal mines there to provide coking coal for steel for many decades. And so we were able to get great assets at quite knockdown prices effectively. So I'm in commercial property because it does pay the base bills, helps me and my wife go into the tech space. But I do just love to sort of build that portfolio as well, and love finding great assets.
Brilliant. And just for the record, I actually lived in Queensland before I started WI, so I was a fan of yours sort of before.
So it wasn't that bad, really.
No. So no one could understand how popular you were sort of, as they're going, the approval rates through the roof. Anyway, side note, Kishore, for yourself.
Yes.
So when we spoke, you mentioned about your areas, you cover a range of different areas. The space that I said I was curious to have a chat about was space.
Space, yes.
So it's obviously a hard area. Once again, like life science, long gestational period, lots of investment up front. Where do you see the opportunity in investments in space-related companies?
Right. So as we all know, recently India actually launched its satellite to the moon and we landed. But the updated news is that we actually did find several elements on the moon, for example, in terms of hydrogen as well as oxygen element itself. And I feel like the fact that we have already established, the presence of certain elements, the next step towards that would be to have a colony on the moon itself for extraterrestrial or extraplanetary travel. So the next segment would be more into mining of space minerals, and a lot of companies would start coming up in this space. Apart from that, it would also be more of satellite tech and connectivity for satellite connectivity scarce regions, where you need more internet connectivity in order for us to generally grow itself as a society. Yeah.
And just go back to you, Rowan. Obviously, we talked about the life science aspect, mentioning that it was a family investment into the company, and then obviously so you mentioned about sort of taking out what was sort of a failed sort of listed company at that time. What other areas do you guys, outside of sort of life science, which I know you're heavily in debt, heavily sort of focused on from a business, what other areas do you and the family look at from an investment perspective?
We're pretty concentrated, so we're high conviction investors, and when we find something that we feel like we have an investment hypothesis in, we'll go hard in that domain. So we've got our life sciences investment in PYC and a couple of other companies in that space as well. And then, like Campbell, we are fans of property. So we've got a couple of residential property and one industrial property in Western Australia that we're invested in as well. It's really just those two asset classes for us.
Brilliant. And how do you think about the mix as far as obviously the high conviction, which also can be defined as high risk, and obviously there's been a lot of value created in that company, versus the sort of more, let's say, conservative, boring is exciting type of investment?
That's not our approach in property. It's not so boring, and we're after industrial properties that are going to be rezoned and then very large mixed commercial residential developments put on them. So I found two industries that are both highly cash flow negative with long lead times to any return. So I think if I get a third, I'm going to get a yielding product that comes somewhere in the mix. So no, we embrace
Campbell's
risk,
happy to chat with you later.
risk wholeheartedly.
And Leslie, for yourself, is there any areas out, and obviously being CEO, what areas do you sort of look at for yourself sort of outside of life science as an area?
Well, so my husband is a professor of quantum physics, so we do look at tech. However, I'm mostly invested in biotech because I believe in it. I think we need better biotech, we need better medicine. We're only getting older, and so these things are very important to me, my family, my friends, so that's what I invest in.
Brilliant. Kishore, so let's say traditional investor looking at investing, and I don't know, I know Plug and Play has been fantastic from an ecosystem perspective as far as bringing founders in, helping educate founders. In your role, do you also play the role of sort of educating family offices, new investors coming into the ecosystem?
Okay, so generally we don't work with family offices per se, but we do know of several family offices that we do come across. Let's say we go over networking events and we have conversations and stuff, and we kind of exchange ideas. That's where we kind of help each other. In terms of raising funds, that's where we would actually need to bring in family offices. So right now for Plug and Play APAC, we don't exactly have a fund that we are raising at the moment, but we do intend to in the future. And should that be the case, then we will be tapping onto our family offices network. But in other offices, because we are established in over 60 countries, we do have family offices who are working in that region as well. Yeah.
Do you want to give everyone a bit of a perspective as far as all the different sectors Plug and Play is actually across? Because I found that fascinating in our conversation.
Yeah. So Plug and Play is actually, it covers over 20 plus verticals. So we have agri-tech, food tech, mobility, energy, crypto is one of the new verticals that was launched. Traditional verticals like your fintech, insurtech, healthcare are also verticals that we cover. Predominantly what happens is that we are working with a lot of our corporate partners. So where we add value is the fact that we establish our connections with over 500 corporate partners globally. And we work with these corporate partners on their corporate innovation front to identify problem statements that will be very relevant for them. And what we do is the fact that we have our own proprietary software called the Playbook, where we have over 80,000 startups that we personally know of in our database. And it sort of acts as like a Crunchbase, but it's more in-depth, and we have personal connections with every startup that's on board because we have a global ventures team looking after these startups, right? So whenever these problem statements come from the corporate players, we will take the problem statements, analyze it internally, and they'll be like, okay, what are the companies that are working on these problem statements? And we will try to connect the startup to them. We might not actually invest in these startups, but these are the startups that are still in our network anyway. So having these connections and establishing these connections kind of drives the innovation front itself. So let's say when we introduce a startup to our corporate partners and they like it, they can run a POC and see whether it works for them. And then if they want to invest, they can go for it as well. And if we find that our corporate partners like it, and because they know the space more than us, we would come on board as an investor as well.
Got you. And just for you, and sorry to ask you two questions in a row, but I think everyone sort of appreciate you get a helicopter view that I think most of us don't get. Like we're all busy, we're actually building businesses, and then we've got our sort of personal side. You, on the other hand, I imagine every day you've got people pitching you, and you're going to different events like this, you're networking and so forth. So from your helicopter view, you're sitting here in 2023, you've watched the sort of companies try and survive 2020, then scale 2021, then scale back 2022. Then obviously you're seeing generative AI come in. When you're sitting there by yourself, when no one's talking to you, thinking about your own investment thesis of as to how things are going to play out, what goes through your mind?
Okay, so the thing about me is that I'm a trained engineer. So I don't generally look at, when startups pitch to me, right, I don't generally look at their market sizing. To me, it makes sense whether your technology works in the first place. Because a lot of these companies, like you said, are coming up with generative AI, right? Ever since the hype of ChatGPT came in, they are just like, they just throw in either blockchain or the word AI in the company. And they'll be like, okay, our valuation's 10, 15x. And then we are like, but does your company actually need AI, or does it even need blockchain in the first place to solve the problem that you're working at? And when we question it, they're not able to give us an answer. So we are like, okay, thank you very much for your time, but take care. So it's more of having these kind of inquisitive, intellectual conversations and kind of like churning it out of the founders itself, whether this is actually necessary or not, and understanding the technology behind it that kind of drives our investment thesis itself. Because yes, at the end of the day, you are going to be able to make your return of investments. But if the technology doesn't even stand out or it doesn't even make sense, then why are you even investing in it? It can make sense on a global scale where you can try to have like a market for it, but can it actually come to fruition? I don't think so. So that's where I kind of look at startups from more of a technological perspective.
So in my next question, I'm going to come back to you about sectors. But Rohan, for you, for your own sort of, obviously you're working in the business, but you've also got your own investment thesis. You think about what PYC can look like 5, 10 years from now. And you also, I imagine, are observing everything happening in the life science space. What's with your investor's hat on, what is your perspective about what are the changes taking place in life science and healthcare? And what are the investment opportunities for investors coming into that?
Life sciences is a radical place to be. There is so much capital behind this in the US and so many smart people working in this domain, a bit like Leslie was saying before. It's a very, very exciting and hyper-dynamic industry to be in. So we've got all of the usual excitement in the generative AI and the macro trends that are happening outside of the life sciences, but there's stuff happening inside the life sciences in the last 5, 10 years. We spoke previously about the non-clinical model, so, building human organs outside of a human. This kind of stuff is pretty exciting. The work that Leslie is doing, the idea that you can engineer the human genome now, so you can manipulate the DNA, I think, fascinating in an ex vivo sense. There are now people who are moving to do that in vivo as well. So changing the 3.6 billion letters that make you, and me, happening live in real time in a human. These are phenomenally exciting areas. And most of it is happening in the cell and gene therapy domain, so the area that we have spoken about. And I think there's just so much excitement within that domain itself. A lot of the future is going to be directed there, coupled with whatever AI can do in that space.
So funny, our next event that we're going to do in Sydney, we're basically based it around Kathy Wood's platform technology, and obviously genomics sits there as one of those technologies, and we're calling it the future disrupted. I think it's sort of a good sentiment. Leslie, from your perspective, like obviously the same question that I asked Rohan, like how do you see this next sort of 5 to 10 years playing out? What are the investment, like when you go to the different conferences globally in life sciences, what are some of the investment trends you're observing?
I think due to the macro environment, the biotech has been hit fairly hard. And so people had to be incredibly competitive and then creative and innovative. So when I speak to US funds, they tell me, the cream will rise to the top. And so it's much more competitive than it ever has been. So I think you have to be much more innovative and you have to use your money wisely. Choosing which product you're going to take forward is a choice we're now having to make that we had the luxury of not having to make before. So I think it's getting better though. So those products that are superior in your portfolio or amongst the competition will rise to the top.
And Campbell, for you, if you were asked to do a presentation on your investment thesis for the next sort of 5 to 10 years, what are you looking at?
Well, if I just speak to the commercial property side of it, but one of the comments applies to it, I think it's just going to be the environment of inflation that we're going to have. I don't believe that central banks will get it back in the bottle where they want it. There'll be higher levels. I think we're going to be living with inflation rates across the globe of between 4.5% and 7%. So I think the era of ultra low rates is over for the moment. And the reason is because there isn't the same political pressure on politicians for fiscal discipline. So like Australia, who've, for example, for years had, balanced budgets, the idea of debt was anathema. Politically, it was significant, not anymore. So that's just one example. So I think that really does actually push money back towards bricks and mortar. It's a pity, because, I think, if I just speak from an Australian context, Australia was bad before where we've just got to, in that we didn't allocate enough risk capital to biotech, to tech startups and the like. That's historically been bad compared to, say, the United States, and there was a very limited VC space, still is, and that's what you're sort of helping to try and fill. But I think when you've got higher inflation, it's going to be to the detriment of the higher risk areas because they just, because people are going to be looking for more solid investments.
And I suppose to dive more into some of the wins that you'd be facing or you'd be sort of talking about, and I know you've got a lot of sort of networks in commercial property and so forth. What is in San Francisco, in New York, they're talking about the issues, how buildings are now being valued at half of what they previously were. The issues of, work from home. I don't know if Singapore has the same issue as far as trying to get people back to the office or them having to mandate people coming back to the office. What are you seeing as far as, from your perspective, what's taking place? And I suppose where is the threats and where is the opportunity?
Well, the big threat at the moment, which is the opportunity, is in the office space. And those people who heard my presentation just before lunch, I'm sort of repeating myself a bit here, but the sentiment against office is very negative. Okay, and you talked about the sort of the post-COVID people working at home. I would say that the top end of town, the large corporates and government have had particular difficulty or reticence to require people to come back and work. Now, I do actually have a feeling that that's going to continue. That's going to end. I don't think you can run productive organisations, build teams, culture, and achieve your objectives if you have a lot of working at home. I think you've got to bring
very
people
companies
back.
that really like the idea of work from home for a start with, are the first ones mandating it to come back to the office.
Yeah, exactly. So where is the opportunity? Well, the opportunity is because the sentiment is so bad at the moment, parts of the commercial office space are being overlooked. So Bruce Anderson from Stronghold said this, and I said this today, that if you go to suburban areas, suburban office, which has great car parking allocations, good public transport, accessibility to major motorway networks, that's in demand. Companies, SMEs particular, want to be there. We've got buildings that are full outside the Perth CBD, 10 kilometres south of the Brisbane CBD. We've got one we're buying in Canberra at the moment, which has been poorly managed, but we will fill it up. We're very confident about that. And the point is you get to buy those things really, really well. They have been undervalued. There aren't people wanting to be in the space at the moment. So that's an opportunity.
And Kishore, for you, as I said, you cover a lot of different sectors. What are the sectors which you think are going to experience the greatest rise over the next sort of 2 to 3 years?
Okay, so I would say hydrogen, ammonia and ammonia storage, anything to do with that, and mobility. So these would be the three main spaces that I will be thinking that there's a lot more growth in. Simply put, the way that we need to change the kind of energy sources that we get have been a lot of pressure by governments as well as corporations to try and change these kind of usage of coal and oil and gases like fossil fuels. It's a hard shift, but it's something that a lot of companies are working on right now. And having those kind of alternative energy storage as well as energy creation platforms is really, really important. And ammonia and hydrogen seem to be the most promising ones in the recent years, at least from the startups I'm seeing. Another one would be also wave power, wave and offshore wind power. There's a lot of companies coming up in this space as well, but we don't see many of them actually having any successes. It's more towards companies that are in the corporate level that are able to inculcate these kind of technologies. But from the startup scene, I don't see many technologies in this space that are being successful.
Have I got some introductions for you?
Absolutely. Russell's just down there at about the third or fourth row.
I was going to say, we'll just walk you around and have a chat to some of the companies. So my own personal thesis, and I'll get the guys to finish on their own sort of, just on sort of any final thoughts. I mentioned at the start today, what I'm so excited about for this next 5 years. And yes, this last 18 months has been hell for our space. Wee Meng was up here talking about some of his, being open, talking about some of his failed investments, talking about how he got punished. It is such a hard thing for companies, especially alternatives. But what is interesting from my side is we were doing an event with a company called PEP. So in Australia, PEP is one of the largest private equity firms. And one of the things that they indicated was how the private markets is going to become great, how there's a lot more money going into the private markets, and how there's more and more companies looking to stay longer private and actually not go listed at all. And I suppose, both of you can attest to how difficult it can be to be a listed company in an environment where you need to sort of raise money. But the 5 areas I mentioned, as far as, obviously all the different interests coming out from innovation in software, AI, and so forth, it means as us as business owners, we can build businesses faster with a lot less people than what we required beforehand. Therefore, the capital that we required before, we may not need as much. And this is what I think will be interesting, because really, if you think about the VC model needs more capital, more funds under management for them to grow revenue or bigger value exits. So I do wonder what this capital raising space looks like 5 years from now, if there's not the requirement for the large funding rounds previously to hire the amount of people. Then also the other part, the desire for the greatest transformation I see is the millennial wealth transfer, where baby boomers are actually transferring. It's something like $24 trillion in the US alone over to millennials and Gen Z. And so that changes the whole game as far as what are the investment trends coming forward, what are the consumer trends coming forward. Then you add to things like that as far as digital assets and crypto, which is very much built by millennials and Gen Z. Then you've got the Bitcoin halving. Then you've got network effect, which if you look at this next generation coming through, that is pretty much what they're all sort of, it's what they've grown up on, it's what they've been built on. And then you see the cost of some of the innovative technologies, obviously not for the investment in life science, but genomics as an example, the cost to sequence a genome going down from $1 billion in, what was it, 2000, down to $600 now per gene. That is absolutely nuts. So when I think about this whole area between the excitement of all those areas I mentioned in the innovation space, and then you've got private markets looking to become a lot bigger, to me, the alternative area is likely to become one of the most sort of focused upon areas going forward. And then with that, we'll probably get more media coverage, more disclosure, more people, more investment coming into it. And my favorite saying that I learned from one of my shareholders is a rising tide lifts all boats. And that's why I like, that's why life science is interesting, how it goes through its sort of ups and downs. I know you've experienced with your share price, but when it goes up, and I remember a VC talking about when the bull market is on, that's when a lot of the wealth is actually generated. The hard part is for us, we've got to continue building regardless of bull or bear market, and so there's a lot of, from my perspective, having that helicopter view, super excited about what comes next, but also very cautious about things related to obviously how war can impact, the continued impact of inflation, how it affects capital coming into this space. And then also doing I suppose making sure that investment continues to go into innovation and more opportunities get created. So they're the sort of things I'm thinking about from my perspective. Just a final note, I know we're sort of running out of time, but just a final note from each of you. Any other thoughts on your sort of own investment perspective going forward? Starting with you, Ryan.
I think it's as you suggested, and Leslie made the point before, that it's been a really hard time in tech these last 24 months. I mean, really, really bad. And so a lot of the companies that were there are no longer there. And I think a lot of the cream has risen. There's the old adage in life science that good science always gets funded. It doesn't necessarily always get funded at fair valuations. And so that's the problem that we've had, but we are building businesses here and we've got to do it throughout different parts of the cycle. So I'm just grateful that firstly M&A has kicked off within our industry, which is a good sign. And then albeit the cost of capital may remain higher for longer, at least it's high, but with the prospect of coming down or at least staying stagnant. And what investors really don't like is the uncertainty of it continuing to rise. So yeah, I'm confident that there are better times ahead. And when you've been through a market as bad as that, at least you can say the only way from here is up.
Leslie?
Ditto, Rowan, totally.
It's been rough.
But I think you just have to stay focused, because at the end of the day, what you invest in a biotech company or invest in another company is to be able to produce what you're doing. And I'd like to be able to say, I produce a drug that cured certain kinds of cancer. I mean, and you would want that too as an investor. So I just have to keep focused, do multiple roles, do a lot more with the amount that I have, and produce.
Look, I just think it's probably in our business, it's about trying to take advantage of some of the technologies, particularly in the ESG sort of space, to help us run buildings more efficiently, squeeze more out of it, to help retain tenants, lower their cost of occupation, and deliver some better returns to investors.
Okay, so I personally think that the investment thesis right now is that everyone is holding back on their money, and the market is going to be a bit more bad for the next couple of months until the end of Q1 next year, I would say. So whatever we thought it was bad, it's going to only get worse from now on. But my word of advice to founders would be to just keep your head down, just continue doing what you're doing, and eventually there will be a VC or some angel investor who would believe in you, and just do the good work. And hopefully things will turn much better soon, and we all can rise up together.
Well, thank you everyone for participating. I just suddenly can't speak. Much appreciated getting your insights for our panel session. Thank you everyone, and back on to the next session. Thank you.
Thank you to all of our panelists. That was the last panel discussion of the day. That was definitely an illuminating discussion, highlighting what's definitely available in the alternative investment space.